I don't give these warnings so that you freak out. I give my subs the warnings. I don't give you these warnings so that you freak out. I give my investors 3, 2, 1. I don't give you these warnings so that you freak out. I give the investors that watch me a warning so that they don't say that they never were giving the thought of, doing their own research and seeing where we're really at in reality versus what the headlines are saying or what other YouTubers are saying. I just want you to be aware. So today we're doing Market Cycles 101. This ain't Harvard, this is HINANCE, okay? So I'm not going to be saying every single detail about market cycles. If there's something that you know that I didn't mention, feel free to put it in the comments. But don't tell me that I missed this, that, or the third. I'm trying to keep this simplified. I'm going to give y'all the kind of the book definition version, and then I'm going to kind of simplify it in life terms. Maybe I'll just kind of I'll go hand for hand with the steps. That's what we'll do. So the first smart question anybody would ask is, what are market cycles? Economic trends that analysts observe during different business environments. If anybody's ever taken an economics class, very boring, but very informational when it comes to what is happening, what trends are going on in our economies and how the things flow. Statistics don't lie. History repeats itself. I know y'all know this. You have the Google box in your hand. All you got to do is the research, right? In market cycles, for this specific one I'm speaking on, because I'm sure there's plenty out there that you can speak on. There's 4 stages of stock market cycles. 4, not 3, not 1, 4 stages. You don't do stage 4 without stage 1. First stage is accumulations. During this stage, immediately following the bottom of a market cycle, after determining the worst is over, people that know what's going on start to buy. Some may say we're in this moment right now. To simplify this, let's think of life, right? You're born. Before you can walk and stand, you crawl. I like to compare stage 1 to crawling in life. Stage 2, markup. At this point, the stabilization of the market has been going on for a while and is starting to move higher. FOMO, fear of missing out, starts to take hold and investors experience feelings of greed. When I compare it to life, I would say that stage 2 would be standing up and walking. As a child, you start to get some FOMO when you're seeing people being able to move into different rooms and walking away from you, and you can't fastly catch up. But when you're a kid, when you learn how to stand up, start walking, you start moving with the rest of the crowd. Stage 3 is distribution. The prices in the market enter a sideways market where they trade a fixed range without many extensions, and this sideways market can last weeks or it can last months. When the distribution phase ends, the stock market starts to reverse direction with classic double and triple tops before continuing downward, which some would say we are in that trend. Some could say, right? For stage 3, when I compare it to life, this is the running stage, when you learn how to run. And it's very broad because you can run from literally, from 7 to 80 years old, maybe not. But like I said, I'm just trying to put it basic so you understand what a cycle is, right? A general cycle. That way it gives you maybe a little bit more perspective because you're going to have to do your own research on specific market cycles. So stage 4 is the markdown. This is by far the worst, most painful phase in the stock market cycle for those still holding on to positions at elevated prices. Many investors hold on to underwater positions in vain, hoping that they can break even or that things will return to normal soon. When the market falls below 50% of previous highs, which a lot of stocks have, the laggards and others that fail to realize things had turned for the worse start to sell. And maybe that's why they say we can start to see more downward trends, right? Because if for many of you who invested, summer 2021, I'm sorry. I'm very sorry. And I always tell people this is a long game. And, this is affecting everybody, but maybe this is why we can maybe start to see more downward pressures if the people that have been holding all these long-term, I'm a long-term now, I'm saying, maybe this ain't going to turn out how I thought it was. So, forget about all that long-term stuff, hypothetically speaking, right? There's people that probably feel that way. They don't know if they should hold. You don't know what's coming up this year. You don't know what, you never know what we force people to sell. So for this stage, it's pretty much kind of like getting old and dying. It's sad to say, right? But it makes sense. You crawl, you stand up and walk, you run, you age, get old, and you die. And a new person is born every day, and the cycle remains the same for each and every person. Some people don't make it through all 4 cycles. Some people do. That's the nature of it. That's the nature of the beast. And I think that after stage 4, there's a sign that the bottom is near, but you don't know how to time it. It's unpredictable. There's so many manipulations. A news article, a fake news article can make something go wild. We're trading against hedge fund bots. An error in the bot can make something go south or north. So it's things to keep in mind. Like I said, this isn't Harvard. Listen, don't make me jump through this screen with no extra stuff. This was here to help people. This is Market Cycles 101, a very simplified version. This is not all the details. Grab your Google box in your hand. Start searching what market cycles are we in. Actually, there's some homework. I've never given out homework on the channel. Go search and tell me where you think we are in the market cycle. Are we in stage 1, 2, 3, or 4? Put it in the comment section below and let's have that debate, because that's a real good debate. That's a good debate for my future millionaires too. Shout out to my future millionaires watching this right now. Put a money sign in the comment section below. If you're interested in joining the Future Millionaires Discord chat, shoot me a DM above. It's very simple. Listen, very simple. Shoot me a DM. I'll get you the link. We're just a group of investors looking to build generational wealth through sharing resources and having daily financial conversations. Very important part, y'all. So yes, let me know in the comments below, where do you think we are at in the market cycle right now, today, based on what I've explained to you. I can't wait to see what y'all say. But I appreciate y'all for watching. I'll check y'all out next week. You greedy investors and filthy animals.